Welcome back. A stock that has been buzzing around all through the morning and this day so far is Gateway Distriparks, up around 10% after reporting a good set of numbers in the first quarter. Consolidated numbers, obviously, further aided by Snowman's merger. Let's talk about the overall performance of the company going forward. Samvid Gupta, who's the Joint Managing Director, joins in now. Samvid, good afternoon. Good numbers coming in. Let's get out the basics first. What was the EBITDA per TEU for your rail and CFS business in the first quarter? What's the target that you have for this year on EBITDA per TEU and volumes for both your rail and CFS business?
Yeah, hi, good afternoon. Thank you for having me on the show. So the rail EBITDA per TEU was about 9,100 for the quarter. CFS was at 1,500. So there was a slight decrease in the rail because of lower double stacking as well as lack of exports. So there was some imbalance and increased empty running. CFS improved after a few quarters. It's come and crossed 1,500 again. So the target is that within the next couple of quarters, we should get back on the rail side to 9,500 per TEU, and CFS should hover around 1,400 to 1,500. On the volume side, we are looking at a double-digit growth for the rail side. CFS also has seen some improvement in volumes, and that should continue about the 5-6% mark.
Okay. Samvid, hi. Welcome to the show. Just wanted to understand that what was your double stacking this quarter itself, and what are you targeting in FY26?
So it was 39% this quarter. Year on year, it was about 32% Q1 last year. So we've seen a big improvement there. But still, our target is closer to the 43-44% figure, which is achievable. But in Q1, there were some restrictions, especially towards Mundra Port. So we saw higher single stacking going on. But within the next couple of quarters, we will see improvement on that.
Okay. Samvid, good afternoon. You just highlighted a volume number. I just want to clarify again. Volumes for CFS, you said, would be in the 5 to 6% range, right? Because earlier you were expecting 2 to 3%. So 5 to 6% is what we are watching out for in FY26?
Yes, that's correct.
Okay. And also in terms of current utilizations, what is that across streams? You have around 5 ICDs, 5 CFS as well, and you're planning 2 more locations, new locations as well. What is the outlook there?
So on the ICD side, we buy land way ahead of its time. So our capacity utilization on the developed side would be about 60-70%. As we get closer to about 70-80%, we develop some more of the land, and it's basically paving of container yard or maybe adding some more equipment so that we have enough leeway to whenever the volumes come in that we can handle it. So that's on the land side. On the rail side, we have enough capacity to handle about 40,000 TEUs per month. Currently, which we're doing about 33,000 to 35,000 in some months at its peak. So both ways we have enough capacity before we decide to expand more.
All right. And are you still interested in selling the CFS business? Because I remember you all were looking to focus only on the ICD business. And if there was a buyer for the CFS business, you all would be happy offloaders.
Yeah, it depends on the valuation. We had some offers, but they weren't up to the mark. So only if the right offer comes in, we'll look at selling the CFS.
What, according to you, is a right offer? I mean, if you could give us a rough ballpark basis, the business that you do and, peers are valued at a certain price. So what would be an attractive enough offer for you?
So it's not just a valuation of a multiple of EBITDA. There is a real estate value. There is a premium for giving 4 or 5 locations together. So we don't have an exact figure in mind, but in the past we've mentioned closer to 4 digits at least.
Okay, closer to 4 digits is what you'd look at. Quickly, before we wrap up the conversation, any further stake addition in Snowman that you would be looking at? It currently stands at around 50-odd%.
So that was our initial target. We're not against the idea, but we at the same time don't have any immediate plans to increase the stake as well.
And the dedicated freight corridor, is that on cards earlier than expected?
Maybe in Q4 is what we're expecting. The target right now is December 31st, but I think based on ground level, what we've heard, it might spill over to February or March.
And you've maintained market share or gained market share in some of the ICDs that you operate in right now?
Sorry, the voice got cut a bit. I couldn't.
So your market share, you've gained or maintained?
We've maintained. NCR has been stable at about 17%. We've gained in the Uttarakhand belt, but the macro market has not grown as much, but we've increased our market share there.
Okay, you've increased our market share there. And overall, in terms of margins also, what are we watching out for FY26?
Same about 9,500 for the rail vertical EBITDA per TEU and 1,500 for the CFS vertical. So it gives rough margin of 25%.
Okay, 25% rough margin is what we're watching out for. Okay, Samvid, thank you so much for joining us on the show. That was the management of Gateway Distriparks. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.